This is the Friday, January 30th, 2015 version of the Market Plus segment. Joining us now is Sue Martin. Sue, welcome back.
Thank you, Mike.
I'd like to jump right into the cotton market. We didn't get a chance to talk about it on the show, and it has seen a nice little rally here these past couple weeks. Is it starting to buy back some acres?
Well, I think it's realizing it may have to try because cotton acres are expected to decline pretty well here in the U.S. This spring. And so the concern is it's an oil seed. And the one thing about oil seeds, this year, the stocks to usage ratio, while we had good production, for example, in beans and what have you, the supplies globally, even of oil seeds, is very tight, of oil, I should say, that comes from them, is very tight. It's like 7.3% or something like that, stocks to usage ratio. That's quite low. And even the U.S. soybean oil stocks to usage ratio is at 7%. So in light of that, we are tight. And so maybe they're starting to feel this, maybe we need to push a little bit because Canada's canola acres are dropping. And but the interesting thing is, my understanding is that down in Brazil, that on the backside of some of these beans, instead of saffron or corn, they were planning on planting cotton. So it depends on how the weather goes through February, how aggressive can they get harvested to get some of that cotton planted. So, but cotton was due a rally. It was cheap for quite a while. Now the interesting thing is the forecast for spring is wet through the south. That's not a good thing for either beans or cotton.
So maybe they do need to buy more acres just to compensate for a potential wet spring and some brownouts and some quality issues.
Yeah, I think so.
All right. Well, now I'd like to come back. We talked about Doug during the show, Doug in Moses Lake, Washington. He's got a second question for you, and he's curious, at what level should we make new crop hard red winter wheat sales?
Well, I think that for right now, the hard red winter wheat has dropped so hard, as we talked in the show. It's dropped so hard and so fast. I think you need to hold off now, and let's see what happens as wheat comes out of dormancy. We've had a beautiful January, so you feel like maybe things are going to be fairly mild, but let's wait for that wheat to come out of dormancy. We have an early Easter this year. I remember the last time we had an early Easter, the first weekend in April, and I think there was a real good killing freeze right about that time. But let's just see what happens. And they're catching good moisture in the hard red winter wheat, and that's a blessing. But I think we need to just not be so rushing in because, my goodness, wheat's at 520 or 530, something like that, 537 on the board. You know, soft red wheat got down to 497.5 or so today on Friday. And then, you know, yeah, we managed to close over $5, but this is looking pretty pathetic. And I guess I would have to say for right now, I would not want to do that. The thing, too, that broke wheat this week on KC and Chicago was that the U.S., of course, the forecast of catching snow, and then they talked about it might even just be rain, but through the hard red winter wheat. But at the same time, so was the former Soviet Union supposed to be catching some moisture as well. And I think that leaned on the market too. Okay,
all right, so let some news come out that might bump this higher, because right now there's just nothing out there to drive it.
You've held your breath all this way, you might as well hold it a little longer.
All right. Now, speaking of holding your breath, we discussed soybeans on the show, and there has been a lot of concern out there in corn and bean country, and it's reflected here in our questions. We've got Mike in Algona and Wayne in Shelby, Iowa, nervous about beans. And let's talk old crop beans. Wayne's question is, when will beans go back up?
You should get a chance of something here in February. Beyond that, I think then they'll roll back over. I look for weakness in March, weakness in April. The one thing that could change that whole complexion would be if South America and Brazil started catching, in general, in the harvesting areas, rain, and they kind of end up going into what would be a wet fall. That would not be a good thing because all of a sudden it backs up the ability to get those beans out, and it also backs up other crops that need to get in timely, like corn and cotton. But also the export picture, it would bring back that, it would keep that Chinese demand staying with us. And that would be, I think, then it would change that complexion for a while and delay the whole picture. On the flip side of it, Argentina's weather is viewed as pretty good. And all of a sudden, I'm starting to hear Argentina's forecast as far as bean production going up another 1 million metric tons. So what we're seeing lowered in Brazil, even though Brazil's much greater, that it doesn't matter, 1 million metric tons here and 1 million metric tons here is all one and the same. We're starting to see that Argentina's picking up the slack of Brazil, and that's not a good thing.
All right. Now, as we look at new crop, you mentioned on the show your 4-letter marketing plan for new crop beans is SELL. JJ in Oakley, Minnesota is curious, what would your marketing strategy be for new crop soybeans headed into spring? And with your 4-letter strategy in mind, do you have any price targets that producers should be looking at, either cash or on the board?
Well, usually when I talk markets, I'm always talking futures because basis is so different in various places. But I would definitely want to be looking at selling. The one thing that I would recommend is, we know that the $10 level is going to be psychological. And so anytime you start to try to bring the beans back up, new crop beans, I would say you get up around $9.87, $9.90, maybe take a gander at selling some. I think you'll also get maybe an opportunity to take a look at a potential rally in June to July. Maybe if the weather's not, agreeable enough, we can be dry and cool and you won't get that effect. If we're dry and hot, we will. And the beans could lift then up into, even stretch it out into early August. I tend to not think we'll go that far, but you could see them get into, for some reason, looking at years similar, July 17th stood out. I had to go out on the road speaking this week, and one thing I did was I took corn, beans, and wheat, all three, their stocks, ending stocks, their carryouts, and then I took and averaged all three of those in their stocks to usage ratios and overlaid that, and then for the U.S. alone. Then I took and I looked at what the market did in those years that we had increases from the year before. Now we have to keep in mind our production this year jumped 18.1%. That's a lot from a year before. We added, 610 million bushels or something? So will we do that again this year? Probably not. But what was interesting is on those years that we had an increase, I did foreign production, taking the U.S. out of the picture, did all the foreign countries and did the same thing on them. Then I took the years that they increased at the same time the U.S. did, which this is one of them years. A marked pattern show up. It showed that you tended to have a rally in February to early March, but the biggest pattern that showed up was May showed up as either a high or a low, and more times than not, you were moving down into May, and maybe late May you might put a low in, it could be early June, and then you get this spiky little rally that gives up quick, and then you're on down into harvest. And I have a feeling this could be that kind of year unless we get some help out of a wet fall in Brazil, and I'm not sure they'll get that, but that'd be nice if we could order something.
Otherwise, keep an eye out for that spiky little rally into the June time period.
That's right, June, July,
right.
You'll want to use that. One date that I noticed on that pattern was July 17th. For some reason, around July 17th, 19th, right in there, it seemed like a good typical time that the market on that rally would give up.
All right.
And those rallies did tend to be more spiky, and I suppose because of weather maybe.
Sure.
But the biggest pattern that showed up was the decline, usually April into May, early June. That was the big one, and I could see that one fitting real well this year.
Gotcha. Now, Sue, before we let you go, you talked about how we'd seen maybe a little bit of a recovery in the beef market this week, and Jeff from Facebook is curious, when will I be able to afford a steak again? So from the consumer perspective, we did see a little bit of a break in the meat market this week.
Well, we certainly did on the wholesale.
Yes.
Now the question is, will the retailer be willing to drop his price? He hasn't been too kind about that. So he may not, but the bottom line is, I do think, you'll be able to see some chances. You're getting some pretty cheap prices. I still think we're going to have another rollover yet in this cattle market where we decline into April. What I'm wondering about, now here's another thing. If you look at the weather forecast for this spring into summer, it is so different than the last two. We're going to have an early start to the grilling season. That could prop that meat up, and that could change the picture a little bit there. But I think you'll get your chance because I do think overall this cattle market is going to roll back over, and we'll put a low in sometime around, I think, maybe April. We might rally, it's kind of counter-seasonal feel is
Sure.
what it is. But also, this cattle market has got lots of competition with pork and poultry too.
You bet. So maybe fill your freezer in April and grill all summer long.
Yeah.
All right. Well, thank you so much for being with us, Sue Martin. We appreciate it.
Thank you.
And thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we will get expert answers right to you. Thanks for watching, and have a great week.